So both Google and Microsoft are being taken to the woodshed today. Why is that happening? And new home sales were down as well. So what's that mean for the interest rate environment? What's it mean to your investments? We'll cover these questions and many more on today's Market Minute. Today, October 26, 2022, this is what's going on in the market. All three indices are down today based on earnings reports from the big tech firms, Google and Microsoft, and it's dragging the rest of the market with it. The beneficiaries of that is the bond market. The bond market is up and interest rates and yields are going down. What this means for interest rates, the bad news for companies is good news for bonds. There's a rush to safety, or a safe harbor that the bond market provides from equity investments. And so that's what's happened today. Another interesting factor today that kicked in was a 3-month treasury is actually yielding higher than a 10-year treasury. That's a remarkable inversion of interest rates. And what that means is the market believes that rates long term are going to come down. And so that's the bet in the bond market now. That's what's happening right now. It's a very interesting time. And the yield on the 10-year treasury dropped from 4.34 2 days ago to 4.02. So that floor that used to be a ceiling, that 4%, is now becoming a floor, and we're going to see it tested today. So a lot of interesting news, big reports coming out this week. GDP is going to be released tomorrow for the third quarter. Estimates are a 2% yearly pace on GDP. We'll see how that turns out at 8:30 tomorrow morning. And personal consumption expenditures on Friday at 8:30 in the morning. Two big reports coming out this week that give us a really good direction as far as what interest rates are going to do in the coming weeks and months. What this means for you, if you're a buyer, you're purchasing a home right now, you want to lock those loans if you're closing within the next 2 or 3 weeks. However, beyond that, we see that the rates might be coming back down, where the Fed is going to begin considering a reversing trend. There's already a 0.75% increase in the next Fed meeting baked into the pie. So in other words, right now, the market is expecting that, with a 5.5% increase on the last meeting of the year. So that's already baked in. As the Fed starts to turn directions, yields drop as far as returns from major companies right now. They're anticipating layoffs, the recession, and gaining speed. That is all good for bonds, actually. So it's good for interest rates. So hang tight. I know it's been a difficult time. Inflation's still up there. Those figures are coming out next week. So we'll have a good beat on what's going on there as well. If you found this information helpful, drop a like below and be sure to subscribe to our channel. And for our most recent Market Minute, you can go right here. And for our Lessons in Lending series, if you're interested in purchasing a home and understanding more about the process, what to expect, you can find it right here. Again, my name is Brent Starts with Unitas Lending, and this has been your Market Minute.